Good morning and welcome back to the Opportunistic Trader for Wednesday, the 9th. Is today the 9th? I think it is.
Yes.
Overnight action was pretty limited. China was up a little bit. Europe is a follow-through up again today. Volatility is the talk of the day. It is at 20. On Christmas Eve, it was 36. So I know Christmas was a long time ago, but 7 trading days ago? It's gone down almost in half in 7 or 8 trading days, which is pretty amazing. And the mantra is back in, as it is in every year, just to buy the market. So we're back in buy the market mode. Market is up almost what it was down for the entire year last year. The market on Christmas Eve was down 11% in the S&P for the year and rallied to finish down 4.9%, and we're up about 3.25%. So really unchanged all over the place. Somehow they're able to buy them at much higher levels. The S&P is trading at 25.84. The low was 23.16 overnight and 23.40 and change. On a closing basis, we are up over 10% off the low right now. In when was Christmas Eve? How many trading days ago? Can we check? 10 trading days. So we're up 1%. Obviously it didn't happen this way, but we're up 1% a day, every day for the last 10 days to get us back to half of what we lost in an entire year. So, or basically in the last 4 months of the year. So that's sort of where we stand. The sentiment has turned very, very bullish. We don't like that. We didn't do anything yesterday, and if it stays this way, we're going to look for opportunities, but there really are none. I know, Vince, I guess you did a couple of trades yesterday.
Yeah, I did 3. One was a loser on the system. The second was a winner on the system. So I lost 5 handles, and I made 10 handles. And the third one,
Nice.
but yeah, I know. Thank you. Well, hold the applause. The third one, I hit my target, and I got piggish, and I ended up scratching. So
Okay, so you still made money.
Yeah,
I'll take that.
I punted 1 SPY at the end of the day, just for that, and that just ate up a lot of the profits. So what am I going to do? It's a profitable day, but it was a good day that was parlayed into a bad day. It could have been a lot better than I let it go. I let profits run instead of taking them off the table. I hit my target and I didn't listen to it.
The market's pretty amazing. I mean, to be back here at 2600 is pretty amazing, considering we were at 2300 10 days ago. So we think the market's completely overextended. There is no trade in here for now. We would want to be short, but we already lost 40 handles on our short, which is more than usual. So we want to look for an opportunity here. I think this level is a good level to short it at, but we're going to wait till after the opening and then short it. Other than that, I don't see much. We have that regular mix thing where Netflix is down, Apple is up small, Facebook is up small, and Amazon is up small. Google is up small as well. S&Ps are pricing in a much higher opening. I don't know if it has to do maybe with crude oil exploding up, rocketing above $51, now 20 plus 25% off the lows.
It's funny, the overnight headlines are the same that I'm reading as yesterday, whereas they're saying, dialogue between US and China are going well. Things that it was literally the exact same yesterday. Today we have the FOMC coming out at 2:00 with the minutes, which once again we already had Powell speak, so I think that's less relevant.
Yeah, meaningless. But like
you pointed out, oil 51.20. That's been freight train higher from 45 up here.
Well, what's funny? It's the 9th or 10th up day in a row in oil. I mean, last year we had 17 down days in a row. This year we're going to have 17 up days in a row. This is not people. This is just machinery. And the machinery doesn't care about the price. it just wants to buy at 51 and sell at 52. So, that's that's that. All these markets are 10% plus off the lows. Oil's 25% or 22% off the low. These markets are pretty wacky. On my drive in, I was looking at some stuff, and the bottom line is the yield curve is inverted 1 year out to almost 7 years. They were talking about the inversion for about an hour one day and freaking out about it, but now everything is fine about that, so they don't have to worry. Volatility is contained at 20 for traders and people active in the market. That really puts a crimp on what we're doing here. There's no real opportunity. The fear and panic, for whatever reason, is now out of the market, and they want to own the market at all costs. So this is levels or interest places that I would look to short the market. I'm surprised the market is actually up as much as it is this morning. I don't see stocks up this much, but we'll have to see. I think, isn't there a meeting today of Trump and the Democratic Party at some point today to try to solve the crisis?
That's what they discussed last night, but the headlines that I'm reading, that if any, last night, seems like as they were before. So they are not expecting progress.
Okay, I didn't realize that.
If I could interject a little bit of something about your comment about vol. For the last, I'd say, since we were near the lows Christmas Eve, one of the things that we've been saying here in the AM roadmap is that, or actually Larry introduced the concept that we were looking for a capitulation. And I'm going to tie this in with something, with a conference call that I was on for for Jeff Gunlock yesterday. And one of the things that was brought to bear was that we hadn't seen a capitulation to the downside. And I was listening to Gunlock's conference call yesterday and taking notes for gold and looking at the bond market. And he said two things in two separate paragraphs that are completely related and relevant to this concept. Whereas Larry's saying, it's not right now, it's not fun, meaning it's more fun to trade in a down market, even if you are a buyer of the dip, because you have more speed and you have more volatility. But Gunlock said two things. One thing was, we have not seen a capitulation to the downside. And he cited the reason being is capitulations almost always come with volatility going over 40%. That was something he said. The second thing, and we did not have that, as you noted earlier in the show. The second, not to mention, we didn't have that reversal at night you talked about. We come in lower instead of coming in higher. The second thing that he said.
Well, let me stop you just for a second on the first point, okay? For people that are out there listening, you got to realize with Gunlock, okay, he's running. I don't even know what he's running, and if he even has positions in here in a huge way. But whether we had the capitulation or not capitulation, we're so far from the low that to get back to that low, something really has to give, because we are so far from that low. And well, wait, let me just go through this.
Go ahead.
How do we get to that low again, or to that capitulation? And the only way is with some extremely negative news or news headline, or Trump doing something crazy. Other than that, it just doesn't seem like we can get there. So on that capitulation bottom, we did see some selling, all over the board. It wasn't capitulation. It was organized and, well received. It was almost a capitulation to the buy side when we started going up. I mean,
that was his next point. He said that is his next point. And I don't think he was talking positions on this seminar, although he will do that on occasion. He was actually pretty dry and corrected himself on some calls that he made. The second point he made, which speaks exactly to what you're talking about and actually agrees with you, is he said, on the contrary, he saw a capitulation where people had to buy after December 24th. And, we all believe, I believe that was Mnuchin talking to the plunge protection team. But he said, we had a capitulation of people who were forced to buy. He didn't get into whether he thought it was longs or shorts. And I take his analysis during this call at its face value. It's when he goes on CNBC that I think he's talking more positions. I think he's looking to raise money on this, and he was very dry. But his second point was exactly what you're saying, is that, at the lows, we didn't have a capitulation to the downside. We actually had like a capitulation to the upside.
We lost you, Vince.
I'm still here.
Oh, we couldn't hear you for a second. Oh, I didn't hear him.
We actually had a capitulation to the upside, the way we screamed off the bottom. And although he did not get into, nor would I opine on how we're going to make that capitulation lower. That capitulation lower might be a day where we come in lower that isn't at new lows and go in. But I'm not going to guess on that on the how. But I kind of agree with the what, that we rarely have a bottom. If you look back, I did a little back study on that, where the VIX isn't over 40. Doesn't mean that can't happen, but he does agree.
I can't hear Vince at all.
I'm here. He does agree with you in saying that we had a capitulation of buying near the lows, not selling. Mike, can you hear me?
Yeah,
I could hear you again. You're in and out, but I don't think there was capitulation. I think he's off base. I don't think he has a handle on really what's going on here.
No, Larry, he said there was capitulation to the buy side. He's agreeing.
No, I get that, but he was looking for capitulation to the sell side to potentially get long. He never saw it. Then he saw buy capitulation. What does it mean? What is he telling you to do? What is he?
He wasn't discussing his positions at all.
He was just giving a broad view of the market.
Vince, what are his thoughts on the markets right here, covering the major asset class?
Well, he had I'd say the one thing, there were two things that he was trying to drive home, and one, he kept admitting that he couldn't find the magic button for the recession. He kept saying, I believe we're going to have recession, and then he would put up a measure and he'd say, this could be a recession, it could be false. He can't, by his own measures of recessionary leading indicators, he couldn't find the magic bullet. But what he did say that he did find the magic bullet on was that there will be a weaker dollar. He says a quick move to 94, and this could be him talking his position when he calls a number out. He says he does think the dollar is going to get weaker, and it could quickly move to 94. Now, when he said that, keeping in mind that price targets are just made up for someone who wants to get out of his own position, I can filter that out. But looking at everything else he said, tying into that, he was basically saying that when you tie in with the weaker dollar, and this is another point that Larry has made in the past that he's actually not disagreeing with. He said, emerging markets do better with a weaker dollar. Emerging stock markets do better with a weaker dollar. And if the dollar starts to weaken, expect maybe both markets will go up, domestic and emerging markets, but expect emerging markets to outperform. That's what he said. He could be short, he could be long, I don't know, but his logic was sound, and he definitely wasn't tooting his horn on calling for a recession, because he kept saying this. I'm expecting.
But his calls have not been very good. I mean, when yields were at 3.25, he said we were going higher. When the market was, on the low, he said we were going lower. I mean, I don't know. Listen, he runs a huge book, so he can't even maneuver fast enough. I respect the guy; he's awesome, but it's very, very difficult. One thing off the subject of Gunlock that I want to just look at, a lot of these phone makers and big electronic companies are missing numbers. We talked about Samsung, no one cared, but like if you listen to Tim Cook, he was like, he literally had on some kind of outfit and pom-poms. And, he was saying how great everything was. But if you really look at what he said, he said that iPhone sales are going to be down 10% at least. He's blaming a bunch of things. But really, I think the allure is out of this name in the sense that the only reason why I would buy another iPhone, the only reason why I bought a new iPhone the last time is because my iPhone broke or my battery life was bad. Nobody's going out and going, I really love that product. I need that new camera. I mean, how many phones can they just say they got a better camera on?
You're going to buy another one? Or...
No, I will not. Definitely not. Definitely not. I mean, if the phone breaks,
I'll report on the Op Trader a year from now. Well, that's what I'm saying. The battery life will start to drop.
Whatever. I don't think it. I'm hoping it won't on the new phone, but and I haven't seen it yet. But I mean, if that's the way they're making people buy phones, which that scandal about a year and a half ago was swept under the rug, where they had the like the fake battery thing going on. But just pointing out that I thought. Stock was $1 higher this morning. It's now a bit lower, but it should be down big. I mean, this company is in a heap of trouble. And, even though Tim Cook says this and that, it's bad. I mean, it's bad for them, and it's going to be a cycle here where they're going to, run into some problems. But I just wanted to point that out because I was reading through what he said last night, and other than him trying to cheerlead the stock much higher, the only takeaway was really that sales have contracted, and they're going through a period of really slow here. So I don't know how much more impact. The stock is actually $8 off the low of the move quickly, so we'll see if it goes back down. I would think that has a good chance to go back down towards those lows, but overall, I don't see why the market's up so much today. I know in the S&P it's oil, but how many? I mean, I think this is, I don't know if we can look, but it's got to be the 9th or 10th up day in a row in oil. I think it hasn't had a down day this year, which is pretty unbelievable. But that's what they do. The machine does that. It'll just buy
7 in a row as of now.
What is?
Crude 7 in a row update.
How many is it every day this year?
7 in a row, not including today.
Right, so 8 days. Yeah, so it's basically every day this year. Anyway, it hasn't had a down day this year. They love it, and they hated it last year. It couldn't go up. This is what they do. It's the same mantra. You mentioned something about the dollar, how that everyone thinks the dollar is going to be so weak. Last year, everyone thought the dollar was going to be unbelievably strong, but when it comes to January 1, everybody flips, their opinion basis. The calendar. So,
two questions for Vince. One question, Vince. Gunlock, he is bearish dollar, right? As Larry brought that up.
Yeah, he's but he is, and he's his rationale is technical, which makes me suspicious that when he cites technical reasons. Just for the record, when he cites technical chart reasons as a reason for bearishness or bullishness, I think he's talking position. But yes, he did show to me convincingly reasons to be concerned about the lack of strength in the most recent dollar rally.
And thus, he also is thinking that U.S. equities are going to underperform global equities this year, a lot having to do with the dollar side, right?
Well, yeah. I mean, he's actually saying that if the dollar does sell off, you could see stocks globally rally. And I'd like to tie that in with something that we've said here in the past. First, I believe, and it ties in with what he's saying, if you believe that the stock market has more downside to it, right? That's an if. If you believe that it can go to 2,100, then you also believe that it's very likely that at some point Powell will have to back off of QT and maybe even go QE. If QE happens, or if a back off of QT happens, that means that necessitates a weakening of the dollar, which makes stocks go back up. And on this rally, U.S. stocks go back up, possibly, likely, according to Gunlock, lagging emerging market stocks. Because if you look at an emerging market stock market, if you look at an emerging market economy, they are typically more debt laden than us. So a devaluation of the dollar, a weakening of the dollar, makes their debt less cumbersome and helps their stock market. They're more leveraged than we are, is basically what he's saying. And a weaker dollar would help them more than it would help us, but certainly would help us.
Yeah.
That was the point.
Next question I had for Vince was, yesterday you had a post from Goldman Sachs, some of their research you put on the site, which was really interesting. Do you have that information in front of you or remember it by chance? I just wanted to confirm that they had one area where they were talking about their sector recommendations for, I believe, 2019. And so they're talking about being overweight information technology, communication services and utilities, and underweight consumer discretionary and real estate. I was just wondering what your thoughts were on that, and if that was if we were reading that correctly.
Let me pull that up. I mean, that is a where is that? Here it is. Goldman Sachs for where to invest more cash, less stock. Yeah. The recommended sector weightings, I thought that was they're overweighting information technology. Yes. But they're underweighting consumer discretionary. When you look at that slide that I chose to publish there, you get kind of a skewed perception. But basically, when you drill down into the sectors, you see them more interested in. I'm going to pull up the whole equity outlook thing. When you drill down into the actual sectors, they're actually increasing their weighting in areas that they hadn't before, like oil service sector, service industries, and I don't think they ever say sell. Like for example, Apple accounts for 14% of S&P margin expansion, and so they believe that that's too much, and they want to reduce exposure there. They have an upside and downside case, but it really comes down to their sectors beyond that page are broken down kind of like this. Let me find it here. I'm pulling it up on the page. All right, so FANGs, and here we go. All right. They like Google. They like Comcast. Okay, so that's in the same area. In the consumer discretionary, they actually like some big names in there, like O'Reilly Automotive. But the thing that I thought was interesting is that they were more looking at healthcare. That's actually like 2018's numbers you're looking at there. For 2019, they have healthcare, and that's on page 35 of the sheet, as the highest ranking. Then industrials, and then information technology. So that sheet there is basically, I think, 2018's numbers. If I'm not sure, I will make sure of that and put it in the chat. But Goldman basically, now this is a report that I have to fade in general. If they're bullish on technology, I can't see why. How much more bullish can you be? But I do see that in their technology companies that they want you to buy, information technology. Apple is now like their 10th down of a buy recommendation. So they don't buy more, they just buy less.
Right.
I hope that's a circuitous way of saying they cover their asses while they put out their reports.
Yeah. Question for Larry. Crude's just been a freight train up. We just talked about that, 7 straight days. I know earlier in the week, I believe it was Monday, you and Tracy both were taking a look at the 50 level as possibly an area to short. Neither of you did. We're now at 51.25. We have the DOE report coming out at 10:30. Is there a sort of level or something technical or something you're looking at that might lead you to take a position in oil?
Nothing that stands out. It's a freight train up, so we're just going to sidestep it for now, and maybe if it goes up a little more, we'll look to short it. There are no levels. We're, again, 20+% off the low. I don't really see anything here. But the first trade that we'll try would be to the short side. But again, I'd like to see some acceleration here. Hopefully it pops up more here, maybe $1.80, $2. We'll sell some. But overall, you know, it's a green machine to start the year. Everything slid the other way, and I don't really see much in there.
Okay. On that, we're actually going to be speaking. So today's schedule, we got a good schedule. We have Andy LeBeau coming on. So we have the Department of Energy stats coming out at 10:30. Andy LeBeau of Commodity Research Group will be joining us at about 10:40 to break down the figures, give his thoughts, and give us his thoughts on oil. Tracy Schuchart's going to be joining us at about 11 to go over, share her screen, and talk about technical analysis. Interested in her thoughts. Like I said before, she had some different charts where she was looking at this to be resistance here. So interesting to get her update. And then 1 o'clock, part two. Part two, continuing yesterday's options seminar. Vince and Tom will be talking options. Got a lot out of their almost hour-long presentation yesterday, so that was really good, and we'll get more of that today.
Hey, Mike.
Yep.
Mike. You know, I think.
All right. Any other thoughts, Vince, before we close up for this morning?
I wanted to. You know, the point I think Mike was making is that Goldman was recommending information technology. The point that Mike was making is that information technology is at the top of Goldman's buy list. But when you drill down into it, I'll give you the top 3 names that they want. MasterCard, Visa, and Cognizant Tech Solutions. Apple is nowhere in the top 5. So even though it's information technology, they're telling you to buy people that take payment systems, MasterCard and Visa. So there you go. You have to drill down into the actual stocks they're looking at before you look at the sectors.
Okay.
To your point.
Yeah. Maybe we'll talk some about that as well. I'll mention run by some names, take a look at the options side of it. Options. All right, but that's the schedule. We'll also be back on shortly after the open. As of right now, S&P's up 12, Nasdaq's up 35, and Crude is up 3%. We'll be back to everybody in a little bit.
Good luck.